China tech stocks have started to gain traction again, and they may be at the beginning of their third impulse wave or a bull market. The first wave marked the initial rally, followed by a retracement as a second wave. Now we could be witnessing the early stage of the third wave, and we will also examine the fundamental factors contributing to this potential progression into a bull phase. My name is Kon Hao. My work in this channel is to study behavioral science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. During the COVID lockdown, China took the opportunity to overhaul several industries, starting with the property sector through the introduction of the 3 red lines policy. This was followed by reform in the financial sector, particularly in the microfinancing, as well as crackdown on tech, education on tuition, gaming, and others, resulting in a prolonged downtrend. Personally, as an investor, I see this as a brilliant strategy. With the world in passive state due to COVID, China used this opportunity to address structural issues and create more sustainable and conducive environment for the long term. The breakthrough came with the first wave, as the market broke above the downtrend, signaling the end of the bear phase. On 24th September 2024, China launched an unprecedented stimulus blitz, including reserve repo, RRR cut, mortgage rate cut for existing loans, boost lending for consumer and corporates, funding for brokers to buy stocks, bank loans to support buybacks. And from my memories, I do not recall China ever implementing such a wide-ranging intervention. It became clear to me that China had transitioned from an overhaul mode into a phase of preparing to take flight in the post-COVID economy. We saw a brief overextension from the stimulus, followed by a retracement, marking the second wave. As the market prepared poised for its third wave, it was struck by the Liberation Day tariffs on 2nd April this year. Yet, what stood out was the resilience of the market, which quickly bounced back. From the beginning of the year to date, China Tech Index has appreciated by 38% compared to 8% for the Nasdaq. And why do big Chinese companies seek listing in Hong Kong? Because Hong Kong is a global financial hub close to China and is market up priced in US dollars and Hong Kong denominated shares, making it attractive to both international, institutional, and retail investors. If I were a key decision maker at the company, I would like to open up my company to the world. An update on our February video titled China Stocks Are Only at its Early Stage. As the market retraces, I suggest not losing sight of the potential third wave that may be forming. I always use indices as benchmarks to guide my fund allocation across regions. We studied the potential of the Hang Seng Tech Index, which represents the 30 largest technology-focused Chinese companies listed in Hong Kong. This suggests there could be opportunities in some of the individual stocks as well. And we are starting to see similar setup in several of them. And this is one example. Sir John Templeton once said, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria." At which stage was the Hang Seng Tech Index last year, and where is it now? I believe growth will continue in areas like AI, quantum computing, biotech, and energy. Where can we find these companies, especially those are still at a relatively low base? I would like to hear your thoughts. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. remember to subscribe to our channel. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.